In a surprising turn of events shaking up the global tech scene, Nvidia and AMD have reportedly agreed to pay 15% of their AI chip sales revenue from China directly to the US government in order to continue exporting their advanced chips, a move that comes as Washington tightens its export controls on high-performance AI hardware to limit China's ability to advance in artificial intelligence, military applications, and supercomputing, which means this isn't just a business decision. It's a geopolitical one with ripple effects across industries from gaming to cloud computing, as both companies face the difficult choice of either halting shipments to one of their biggest markets entirely or accepting a new cost burden that could run into hundreds of millions of dollars annually. And for tech enthusiasts in the USA, this could mean higher prices for GPUs, gaming laptops, and AI-powered devices since manufacturers may pass on the additional costs to consumers, while data centers, AI startups, and research institutions could also feel the impact due to higher procurement costs and possible delays in chip availability, especially for models that rely on high-bandwidth memory and advanced process nodes that are in limited supply. And what makes this more intriguing is how it changes the global supply chain dynamic, because China has been a massive consumer of AI chips not only for AI model training but also for powering cutting-edge surveillance systems, autonomous vehicles, and industrial automation. So by effectively taxing these exports, the US government is not only slowing China's technological progress but also collecting a substantial revenue stream from American companies, which in itself is unprecedented since it blurs the line between trade policy and taxation, while analysts are split on the long-term outcome, with some predicting that Nvidia and AMD will eventually shift their focus away from China toward other fast-growing markets like India, Southeast Asia, and Latin America, while others believe that the sheer scale of China's demand will keep it a key part of their business despite the extra cost. And looking at the bigger picture, this policy could accelerate China's efforts to develop its own AI chips through companies like Huawei's HiSilicon or startups like Biran Technology, meaning that the short-term financial hit for Chinese firms could eventually lead to long-term independence from US technology, which is exactly the opposite of what American chipmakers might want. And in terms of stock market impact, Nvidia and AMD shares have already been volatile as investors try to gauge whether the additional cost will be offset by continued Chinese orders or whether the move will simply shrink the market, while rival companies in Europe, Taiwan, and South Korea watch closely to see if similar rules might one day affect their exports as well. And the reality for everyday consumers is that this is one more factor adding pressure to an already expensive tech market, especially with the AI boom driving massive demand for GPUs not just for machine learning but also for AI-enhanced video editing, streaming, and even gaming, which means if you were hoping for a price drop on that RTX 5090 or AMD's next general AI accelerator, you might be waiting a while. And on a more futuristic note, policies like this could also push companies to design chips specifically for non-restricted markets, meaning we could see a wider gap in performance between products sold domestically in the USA and those available internationally, which would be a reversal of the trend toward global product parity we've seen over the past decade. So whether you're a gamer, a content creator, an AI researcher, or just someone following tech news, this story matters because it's about more than just Nvidia, AMD, or China. It's about how the intersection of technology, politics, and business is reshaping the tools we use, the prices we pay, and the innovation we'll see in the coming years, making this one of the most important tech stories of 2025 so far.